Into Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. Now, markets looking stable. It's stable showing on the markets with good amount of gains. A lot of it is really propelled by the global markets looking positive. A lot of good news coming in from there is keeping the markets really afloat. 0.74% up when we talk about Sensex as well as Nifty doing fairly good at this point. In fact, have perked up in the last few minutes of trade. Half a percent up on mid-cap index, but the big lead is really coming in from the banking sector. It's Bank Nifty, which is touching in and closing in on a 1% gain. In fact, is inching towards that. And a lot of it is also provided. The steam is coming in from Axis Bank, which has really been gaining. Advanced decline looking fairly strong at this point, Sonia.
Yes, and you spotted the banks. I think what the street is looking forward to very closely is what comes out of the RBI Governor press conference that will start in moments from now. The expectation is that there could be an interim dividend of 30 to 40,000 crores that could be announced. And if that comes through, that will help Prime Minister Narendra Modi's administration bridge that widening budget deficit following a drop in tax collection. So perhaps in anticipation of that, the street as well is a bit upbeat. The Nifty Bank Index is now up at the high point of trade. We'll keep tracking that very closely for you. But in the meantime, Wall Street has rallied on Friday after the US Labor Department released the jobs data. As per the data, the economy added over 312,000 jobs in the month of December, as against the expectation of 176,000 jobs. In addition to the big job gains, wages jumped 3.2% from a year ago. Additionally, Jerome Powell, the chairman of the US Fed Reserve, has pledged that the central bank will be watching how the economy performs this year and will adjust policy if growth slows unexpectedly. Listen in.
We will be prepared to adjust policy quickly and flexibly and to use all of our tools to support the economy, should that be appropriate, to keep the expansion on track, to keep the labor market strong, and to keep inflation near 2%. There is no preset path for policy. And particularly with the muted inflation readings that we've seen coming in, we will be patient as we watch to see how the economy evolves. But we're always prepared to shift the stance of policy and to shift it significantly if necessary in order to promote our statutory goals of maximum employment and stable prices.
All right, back home then, let's focus on some of the counters which are making news today. Bharat Forge, for one, that is still under pressure, down close to about 0.9% as we speak. And that is after recouping a large part from the lowest point of the day. So from 470 odd levels, it has gained about $10 already. But that stock has been on our radar on the back of their weak North America Class 8 truck orders for the month of December. Lowest, remember, since August 2017 that this company has seen. And Sonia will give more details on that. What does this mean for the company, Sonia?
Well, this is the second month running that the numbers are very weak. So in November, everyone thought it was just a 1 month blip. But now 2 months running, the numbers have been under quite a bit of pressure. So if you look at it on a month-on-month basis, it's a 25% fall. On a year-on-year basis, it's almost a 45% fall that we've seen. And the graph indicates that the numbers have only been deteriorating. Now, CLSA has downgraded Bharat Forge to a sell from an outperform. They say that not just the US truck business, which after 5 years of an upcycle is starting to slow down, but even the India truck business is now decelerating. And put together, US plus India forms 45% of Bharat Forge's revenues. Not just that, because of the way crude prices have cooled off, you have their oil and gas and industrial export business, which has also been under pressure. In fact, we'll get CLSA's views up for you in just a bit. Apart from that, FTR, the company that reports this data, has indicated that for the next several months, the total orders, the North America truck orders, will remain on the lower side. That's the reason the stock is under pressure today.
All right. Thanks, Sonia, for that. And another stock on our radar is also Titan. Take a look at that. That is really zooming up in trades today, having a good session and getting closer to the 52-week high levels, which is closer to 1,000 rupees, still 50 bucks away from that. But that is the top Nifty gainer today. And the company, remember, has released a business update for Q3 and expects 22% growth in the jewelry segment in FY19. Mangalam joins in with all the details on that. Mangalam.
Over the weekend, we got the quarterly update from Titan for the third quarter, and the key positives are: one, the consumer sentiment across the segments is picking up. That's a positive. Secondly, the company is doing well in what is a seasonally strong quarter. For the jewelry business, which is the mainstay of the company, they're seeing higher same-store sales-led growth, which is a positive because once same-store sales growth comes in, the operating leverage kicks in, and that's good for margins. More importantly, though, the company has guided for full-year jewelry business growth of 22% on the revenue front, and that's a positive because this implies a 25 to 28% growth, upwards of 25% growth in the remainder of 2 quarters, which is something better than what the street expected. Those are unknown positives or positive surprises that came in. The caution that the company gave was with regards to the margin in their watch business, and that is primarily on account of increased advertising expenses, and that is something the management has been talking about from the start of the first quarter. So there was no negative surprise, and there was a positive surprise which is reflected in the stock price. Brokerages are sanguine about this move. Morgan Stanley says that this underscores their thesis of higher market share-led growth coming in on Titan. And at the same time, Citi, they expected 21% growth. The company went one step ahead, 22% growth for the jewelry business. They hold their target price at around 1,020 rupees. But all these brokerages, remember, we spoke with Abneesh this morning. He said that they will roll forward their earnings estimates post the third quarter numbers. And let's see whether there are price upgrades coming as well.
Mangalam, stay on. ITC also, is trading higher. On a brokerage note from Macquarie, tell us more.
Well, over the weekend, there was commentary coming in from the ministers at the GST panel, and that ministerial committee said that there could be a 1% calamity cess being levied in Kerala. And the street likes that. Why is that? Because, there was fears that perhaps this calamity cess on all the things in the GST regime would be across the country, and at the same time the quantum would be higher than 1%. So ITC watchers would perhaps take that with both hands, and that is something that Macquarie has written on as well. So they believe that this has been better than what the street was expecting. They maintain their outperform rating on the stock with a target upwards of 370 rupees, and they believe earnings growth is something that will drive the stock going forward. So no news in terms of an additional hike. Lower than expected hike is good news, but all eyes will of course be on the Jan 10th GST Council meet.
Oh yes, GST on the radar and earnings as well. Thanks so much, Mangalam, for all that detail on ITC. With that, we'll slip into a short breather. But remember, 2 stocks in focus on the other hand because of merger news is Bandhan Bank as well as Group Finance. Bandhan Bank is likely to acquire